Most business owners will be aware of this. For sure, there's capital allowances available on numerous different assets that you might be purchasing through your limited business. When it comes into play in terms of a fit out project is not all assets qualify for capital allowances. So just to give you a few different nuances, furniture is 100% allowable. So typically what we can do is we can look to introduce a finance agreement whereby the furniture is on a hire purchase facility and they can claim the capital allowances available there. They'd actually see a slight benefit compared to paying cash for that element as well, because they'd actually see the benefit of the interest as well. So it'd actually be even more tax efficient than paying cash. And what we can do is then we can structure the other assets which might not qualify, for example, aspects of labour, installation, or assets that might be at a significantly lower capital allowance rate through a finance lease, and then they can still have the tax benefit of that also.
So it's quite interesting. On any project, mechanical, electrical have different rates of capital allowances, as well as then you get down to other joinery items which have different. So it's quite, in the mix, that's where you've got to take that consideration, isn't it, on what elements you want to put through there and what elements you want to do. But that's where lots of clients need to speak to their FD or their accountants to get advice when they do the computation at the end of the financial year.
That's correct, and there's even certain nuances regarding mezzanines, for example. If a mezzanine has been used for storage or if it's been used for other purposes, dictates whether or not it's allowable under capital allowances. So yeah, we'd always advise, we will offer the best level of advice, but at the end of the day, we'd always encourage them to have that conversation with an accountant potentially as well to complement it.
I mean, so it demonstrates that it's really, really important that clients need to do some tax planning, and that's really, really valuable. It's not just about doing a project, financing a project and administrating it. It's also, we run a business, all of us do, and we want to be as tax efficient as possible. And it's very, very important at the outset. Clients need to also consider tax planning when they go along this journey.
Absolutely. And it's certainly something, as part of that as well, we'll talk to customers about, how this year is looking for them, because there are certain, in order to claim capital allowances, they need to be making a minimum of that amount of profit within the financial year. And if they're potentially buying a space or there might be a new start business, we need to understand sort of what that profitability is going to look like within that financial year, so we can then best advise over the remaining years what's going to be the best solution for that.